Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like it to look at how we can combine different analysis techniques to be able to uncover trade setups. A good example I want to look at is the NQ. You can see the NQ is making new highs yesterday, but I particularly want to look at the high of the day here, which came in just after 3 o'clock New York time. Why was this one to look at? Well, this is what we call a VSA setup. So what's a VSA setup? Perhaps if I use our training mode or bar replay mode and I take the chart back to before the market made the new highs. What a VSA setup is when a market makes a move beyond a prior high. So if I skip forward and I skip forward, and let's just zoom in a bit to make this a bit bigger. What we're looking at here is this particular bar has made a new high beyond the previous bar's high. So if I put a high tag on here, can you see that this bar here has then gone up to new high territory? But more importantly, it's given us a red VSA bar on our volume. That means there's unusually high volume going on this particular bar. Now when a bar makes a new move to new highs, in this particular case on high volume, most amateur traders would say, oh, that's buying volume, and therefore want to go long. However, the market professionals are very crafty about this, and they do what's called a fake out. In other words, they use the amateurs buying to sell into to then get short in this particular case, or the opposite side to where the break is, to then move the market sharply in the opposite direction. It's what the professional traders call a classic fake out. We call it a VSA because it's a volume spike analysis. It's where the volume is spiking. So how can we look at identifying this? Well, first and foremost, we need an area of where the market is likely to reverse. For this, we have our DP level. So we go back to the prior pivot, right mouse click, put the DP on. And can you see how this bar here has actually gone into our resistance area? So we already know by another technique that this is an area where the market is likely to reverse. So how do we know whether this is a VSA setup or not? Well, we look to the next bar. So if we go forward one bar, can you see how this next bar has failed to follow through? In other words, it's failed to make new highs and carry on up. This tells us that the volume in the previous bar was not buying volume, it was actually selling volume because it failed to carry on. And of course it failed to carry on, reversing at our particular high level here. I'll just take that particular high level off. So how can we make a trade setup on this? Well, first and foremost, we want a target to go to. Now, normally the obvious target is the last swing from the into the prior high. So right mouse click off this pivot, place a DP down here, and this would be our target level. We then do our risk reward analysis in and around the sell bar and stop just above the high down to our target price. And you can see this fell a little bit short of our normal 2-to-1 level. Remember, ideally we're looking for trades that have at least a profit potential of twice the initial risk. Remember, we use correct position sizing to keep our risks small, under control. However, this is where we can add in other techniques, because if we look at this rally up here, you can see this started off from quite a nice pivot here, but the rally was actually a 5-wave sequence. How do we know that? Well, we right mouse click over the high, we do Elliott wave intermediate, and using my unique isolation approach to Elliott wave, you can see that it found a very nice 5-wave sequence going up here. But more importantly, can you see how that high also came in at this minimum wave 5 WPT? These are wave price targets, or areas where the Elliott wave sequence is likely to end. So in other words, there was another reason why the market was likely to come in for a high at this particular level. But also we know from our Elliott wave teachings, or my unique view of isolation and an isolation approach to Elliott wave, is that if the DP from the prior wave 4, which is here, is exceeded, then the market is likely to retrace the entire prior 5-wave sequence. So we can go back to the start of the sequence here, right mouse click, and place another DP on to give us another target down here. So rather than anticipating the market's going to go to this first target, we actually anticipate the market's going to go all the way down here, and you can see suddenly the profit looks a lot healthier at approximately 6R. And of course, why would we think that this initial target was going to be breached? Well, because this was a VSA setup. Because the professionals are starting to step in here and then move the market. So if the professionals are going to move the market, they're not going to just do a small little swing, they're going to make something a bit big. So when you have a VSA setup like this, coming in at the end of a nice 5-wave sequence, very often the market doesn't go to its first initial target, which is here. It will very often carry on much further. So if we turn the replay off, you can see this is what happened. The market then declined. It declined down through this initial level. Didn't quite get to the target level down here because the market closed. But if you'd come out on the close, you'd have had a nice profit of 4.3R, or in other words, 4 times greater than initial risk. So I thought this was a very good example of how the more experienced users among you can put together a trade setup where there was no automatic trade setup on the chart by combining different techniques we teach in the MTPredictor software program. And as you can see, if we go back and have a look at the whole day, that actually enabled you to nail the very high of the day on the Nasdaq yesterday. So a very, very nice trade setup. On other markets, very quick look, the ES had a nice buy setup in our STF direction a bit earlier. In fact, actually that was just before that moved to new highs there. So if I put the analysis on, a standard trade setup for a nice 2.7R profit in the direction of the large degree trend. Remember, you wouldn't be taking these sell setups because they're against our blue STF color. The YM, again, exactly the same thing. You wouldn't be taking the sell setups, you'll be taking the buy setup, and there was a nice 2.6R profit. But you wouldn't be taking the sell setups until you got to a logical area of where the market was likely to reverse. And the best one of these was on the NQ. Even though the YM here also made a rally very nicely into the typical wave 5 WPT, the setup wasn't as clear and nice as we had on the NQ. The NQ one was a lot nicer and clearer and cleaner setup because of this VSA setup where we went clearly beyond that previous high there with our VSA bar, and then that reversed down. So I think this has been a good example to show how once you become experienced with the MTPredictor software program and the techniques we teach, how you can combine various techniques to be able to uncover some nice trade setups. In this particular example, a VSA setup combined with our knowledge of our Elliott wave patterns to catch the very end of a wave 5, but because it was a VSA, we're anticipating the market was going to go beyond our initial wave 5 target, which was here, to be into the lower target, and as you see, obviously we didn't get there because the market closed, but nevertheless it was a nice 4.3R profit. So hopefully a good example of combining different techniques to be able to uncover trade setups using the MTPredictor software program.